Well, welcome everyone to tonight's Making Sense Project webinar. It is November 12th, 2015, and we're so glad to have you with us this evening. My name is Hillary Hunt, and I am the Making Sense Project Coordinator. It's my pleasure to welcome you tonight. I wanted to provide a brief overview of our agenda. If you haven't taken note yet, the GoToWebinar control panel now hosts our handouts for today. So if you would like to get a full copy of the agenda as well as the bios on each of our speakers, you may download it at this time from the handout section. Feel free to take a look at that and peruse that at your leisure to get more background on any of our speakers tonight. But we have a really great session planned for you. The focal topic for this session, as we move through our 6 modules and big ideas from our Model Financial Education course, is on earning income. And so we're going to see a couple variations on that theme this evening. Brian Page is here with us to talk about the budget challenge, in which students earn an income and then must budget that appropriately through the course of a simulation. Dr. Brian Farester with the Public School Employees Retirement System will be talking about an important piece of employee benefit packages, which is for most of you your PSERS retirement benefits, and talk a little bit about the difference between defined benefit and defined contribution plans, as well as how the plan works for Pennsylvania educators. And then wrapping things up, finishing things off this evening, will be Susan Sharkey with the National Endowment for Financial Education. She will be sharing some of the slides and information from the high school financial planning program on the topic of earning income, as well as giving us a peek at the brand new Money Teach website that has launched, and we encourage you to become a part of. So a few things first, just a couple of housekeeping items. For those of you that have not participated before, you have a couple of different options as you participate. You can switch your audio over to the telephone if you're having any issues. You can make the webinar appear full screen. You may also hide the control panel by using this little arrow function. And from time to time, we might ask you to raise your hand, and that function is there boxed out in the orange. Perhaps most importantly, feel free to offer up any questions that you might have in the questions section. If time allows, we do have a tight agenda, but if time allows, I will provide those to our speakers to either answer now, or we can certainly follow up and get you answers to any questions that you might have at a later time. If you're having any issues with your sound, please do check your computer. We do have myself and 3 presenters all presenting from different locations with different equipment, so you may need to adjust your volume in between. Webinars are offered as a partnership between the Pennsylvania Department of Education and Penn State University. My colleague, Dr. Kathy Bowen from Penn State, is on with us tonight as well, and I appreciate her participation. It's part of a series of financial literacy and economic educations, and if you've been a part of these webinars, you've heard about lots of things we do. We do have 4 more webinars coming up in this school year, so if you haven't yet signed up for those, I encourage you to do so. Also, we've launched now the iTunes U course as part of Pennsylvania Learns on Personal Finance, and I'd encourage you to take a look at that. Anybody who's coming to the PBEA conference next week, I'll be doing a session and featuring this content as well. Most of you are probably receiving our e-blast, but if not, please make sure you sign up, and I encourage you to share that information with your colleagues as well. And lots of ways to connect with us: Facebook, Pinterest, and Twitter as well. And with that, I'd like to welcome aboard Brian Page. Brian is the Outreach and Education Manager with Budget Challenge. And it is my pleasure to have him on the line with us this evening.
Okay, Hillary, thanks so much for having me. I really appreciate it, and I really appreciate all the teachers who are here this late hour to improve and learn and grow. I'll dive straight into it. My goal here is to provide, just a very basic overview of our award-winning simulation. This is not really a training exercise, but more along the lines of just creating some awareness about an opportunity that's free for high school teachers and some middle school teachers. So a little bit of background, I used to teach. I spent over 10 years in the classroom. And in the classroom, I stumbled upon a budget challenge. I was the third teacher to ever use it 7 years ago, and I instantly fell in love with it for a few reasons. First of all, it addressed the behavior gap. I was looking for something that could do it, and an example would be that rather than just discussing what bills look like and reading the fine print, students in the simulation are now experiencing what it's like to have to understand the fine print and be able to pay bills on time. Rather than just show a PowerPoint picture of a paycheck and point out the difference between gross and net pay, students now have to figure that out in the simulation and put it to practice. Rather than just showing students the importance of saving for retirement with the magic of compounding, students now have to determine what 401k to go with, and then they have to figure out how much they can contribute for their future self while still leaving enough for daily needs. The second reason is that I fell in love with it is that it really checked every instructional box that we know works. We know that competitions work, and we know that learning by doing works. And thirdly, it's student-centered, and what I mean by that is, so much of our time as teachers is used to teach students the practices that we know work, and this is an opportunity for students then to take those practices and then find ways that work for them. And in the simulation, they're in charge of their own world, and they have to figure out what money management strategies are in line with their lifestyles and can figure out how to create habits that lead to a financially healthy lifestyle. So Budget Challenge is an award-winning personal finance program. It has 2 patents, and there's 2 ways that you can bring it in your classroom. One is through custom simulations, and those are $20 a student. Typically, teachers who purchase these are teachers who have a unique schedule, or the middle school teachers. But right now, what's more popular, obviously, is H&R Block Budget Challenge. That's a sponsored version. A couple of years ago, H&R Block saw the value in Budget Challenge, and they recognized that if they could get it in every student and teacher's hands, they could make a difference. And so they made it their cause. So for high school students and teachers, it's entirely free. And in addition to that, there's $3 million in student scholarships and prizes that they can win. You might be wondering, too, other things other than just what it costs. Probably classroom time that's going to be necessary for this. It really depends. We had almost 100,000 kids play last year, a few thousand teachers, and they came from broad-ranging content areas. Some of them were math teachers who just integrated this in, and some of them were personal finance teachers who use this as a centerpiece for instruction. So it depends on what you want to do. I would say at a minimum you need probably a day or two prior to the simulation launching to prepare the students and teach them how to make decisions and establish a budget. And then you need probably 15 minutes a week following that to help them understand how to read a bill and pay a bill. As I brought up before, there's a lot of money that's up for grabs. There are 6 simulations. 3 of them have already occurred this fall. There's 3 this spring that you can sign up for today. In each simulation, there are 22 $20,000 college scholarship winners. Throughout the 6 simulations, there's 1 collective winner in addition to all of these winners for $100,000. The co-founders from the beginning were surveying teachers to try to figure out ways to always make it better. What they decided to do based on those survey results this past year was adopt a teacher roadmap that provided teachers with a week-by-week breakdown of activities and resources that they could use that accompany the simulation, as well as activities or support resources for teachers and students to help them play the simulation well. Teachers helping teachers is important. It's an opportunity for teachers who have questions to be able to email in, and we have multiple people who are full-time that help teachers understand how to use the simulation. And then finally, they added a teacher play account, meaning if you want to play alongside your students but in a teacher division, separate from the student division, and experience the nuances of the simulation, now you can do that. So as far as student support resources, this is where we're particularly different than anything else out there. we have a team of people that are designated to help students when they have questions about the simulation. I particularly benefited from this as a teacher. When I initially started playing Budget Challenge myself, I had seven preps in 6 bells. I had 2 classes actually in the same bell, and I was in 6 different rooms. So this was the kind of support that I needed to be able to manage everything that was going on in my life. If students have questions, they can email these people, and on the other end are retired teachers or retired people that were, in the banking industry, and they're there to help them. When students receive an email with a bill, if they don't understand the bill, let's say it's from Zippy's Auto Loan, a simulated company, at the bottom it says contact Zippy's Auto Loan with questions, and it hyperlinks directly to an email, and there's people on the other end that quickly help the student understand. There's a parent link available where parents have access to observe the simulation but not participate. In this way they can see how their child does, and it's a great conversation starter, and we know through research that when parents and their children have conversations about money, that children learn more. There are video tutorials that accompany this. There's a mobile application that's free they can download with their phone or to their tablet, and then of course we have a budget and cash flow spreadsheet that's downloadable. So here's how the simulation works. Before the simulation actually begins, teachers have to register and then create classes. We suggest to do this as soon as possible, and then once that's done, teachers have access to resources to help them understand how to use the simulation. And then at least 2 weeks prior to that, it's open for students to begin to make choices and establish a budget. We recommend to give enough time before the launch of the simulation to account for snow days or any hiccups that may occur. But before the simulation begins, there's a lot of learning opportunities because students are being exposed to fine print and these different vendor selections that they have to make in order to figure out how to win the simulation. And obviously, using all that information, they have to establish a budget. When the simulation begins, you have 10 weeks from that point where students will begin receiving and paying bills, and they have to make decisions on how they're going to manage money. Everything's real time, real world, so if the simulation says it begins on 9/10 in the real world, then the simulation begins at 9/10 through all the bills and all the interactions, so it's real time, real world. And during that period of time, during those 10 weeks, students also take weekly quizzes and take surveys. They're scored by how much they save towards their 401k, and that does include a match. Any fees that are accompanied with decisions they make, such as overdraft protection fees, non-sufficient fund fees, the kind of fees that they'll experience in the real world. Penalties such as credit utilization penalties, meaning if they use more than 50% of their credit limit, they get dinged, because in the real world we know that always carrying a high balance, it has adverse effects on your credit score. And then positive responses on quizzes and responding to surveys. So in doing this, students have to really make some trade-off decisions to figure out how much they can save for their future self while still leaving enough to get by day and pay the bills that they know are expected, and also manage life's unexpected events. So I'm going to dive into a demo of what it looks like, and I'm going to, in doing this, I'm going to guide you through this as a first-year teacher would look at it, from the beginning for where you register until you actually have your hands on the resources. So as you can see here, this is the teacher home. This is what you'll see when you after you've registered, and you have access to all of the information here. I know you probably look at this and think it's a little cumbersome because there's a lot of things to it. Just understand that how deeply you want to dive into this is up to you. When I initially started to do this, I used this as a supplement. I just wanted to make sure students could start to learn through trial and error some money management strategies that worked for them. And then as time progressed, I started to spend more and more classroom instructional time using the simulation. The roadmap is a great feature for a first-year teacher. This is where we would suggest that you start because it provides a week-by-week breakdown of what you can expect and resources that accompany the simulation. So just as an example, in Student Buckle Up Week, which is the week just prior to the simulation launching, we have all kinds of tools here to help. Pit stops are these one-page documents that helps teachers navigate through the simulation, understand how topic like national standards relate to the simulation. Then test drives are these, up and moving hands-on activities that students can use, that you can use with your students if you're looking for additional activities. These are always optional. And then there's all types of video tutorials that accompany the simulation. So as an example, when you need to teach students how to use their budget, there's a budget and cash flow spreadsheet tutorial where it's easy for a teacher to play and pause and teach students how to establish a budget using the tool. So the next thing that a teacher would want to look at is the leaderboard. They have access to student leaderboards to see how their students are doing. Let's see if mine pops up. Last time it took a little bit. In the classroom leaderboard, students have access to it as well. They can see how they're doing against their peers. Once again, great conversation starter for them. They're able to see which students are excelling and which students aren't, and they start discussing the reasons why with one another. And it's an opportunity for teachers to really engage in those conversations too. So as you can see, they can look at the classroom average and the course average. In addition to that, teachers have access to engagement statistics where they can see, how often a student is logging in. It tracks whether or not they've logged in the previous 5 days, and it also tracks whether or not they've incurred any late fees or late penalties. Like I mentioned before, we do have week-by-week quizzes that do contribute towards the students' there we go. The students' score. We don't make it a mystery for the teachers. We show them exactly what quiz questions are going to be asked, and we do provide a test bank of answers. We just hopefully, ask the teachers to make sure that they don't share answers until that quiz is closed. But as you can see here, here's an example. They have to read a financial document, and they're asked a question based on the financial document, and then you have, what the correct answer is, and then any answer explanation. Pardon me. And then finally, in the teacher area, I just wanted to point out the teacher help desk. And this is where the knowledge base and the teacher help desk. Knowledge base is like a catalog of commonly asked questions where teachers can quickly turn for answers. And then a teacher help desk is where they can write in if they can't find the answers online or in their teacher toolkit or any of the manuals that are provided or in the video tutorials. So now that you have an idea of what it looks like from a teacher's point of view, I want to show you what it looks like from a student's perspective who has yet to have their simulation launch. So this is what a student looks like at their student home. All of these vendors have been selected but one, and we'll get to that momentarily. But the first thing that as a teacher that we would recommend is that you expose students to the info packet. And the info packet is essentially it's a summary of what the simulation is going to look like for them. It begins with what the situation is. They're all college graduates and they're making just over $41,000 a year. And then it explains what 401k options they have. It goes into their different banking options and all the fine print that they can expect to experience when they do banking. The fine print and the fee structures are consistent with the real world. We want to expose this to them now in a safe classroom environment rather than the first time in the real world where they pay by the mistake. Vista View Apartments, again, they have to make a decision of where to live. They've got to decide what kind of insurance to purchase. So just as an example, when I taught and I used Budget Challenge, this was what we would do prior to the simulation launching. And I use this as an opportunity to teach kids how things like terms like deductibles and premiums how those terms really impacted their budgets and the decisions that they were making, and they were forced to make trade-off decisions. So for example, if this student decides to choose auto insurance, that student's going to pay a higher premium, but the student is going to pay a lower deductible. So it was a good opportunity to discuss what a premium and a deductible was, so they could then try to synthesize that into the simulation. You'll also notice that we don't make it a mystery when bills are going to arrive, with a couple exceptions, and I'll get to that. We lay out in the fine print when they're going to be issued, and so what I would have my students do is they would have the information packet open at the same time that they had their budget and their cash flow spreadsheet open. So what I'm showing you now is a downloadable tool that we use where students can take the information from the budget and cash flow spreadsheet, and then they can turn around and take the information from the info packet and put it in their budget and cash flow spreadsheet. So as an example, Zippy's auto loan issues a bill on the 16th. It's due 10 days later, the 26th, and do they have a grace period? Yeah. So on the 27th, it's due. And so the routine for the kids initially is that on the 27th, they go to wherever Zippy's auto loan is, and this is for a different simulation, by the way, but they go to the car insurance on the 27th, and then they would put in that amount of money. So let's say it was $783, and then watch carefully on the right-hand side, and you can see that it changes the balance. So students, as they're scheduling payments, they then have an idea of, based on those payments, what they can contribute towards their 401k, and you'll see that on their deposit side, and it allows them to start to really experience what it's like to be an adult and have to make these kinds of budgetary decisions. They got to decide what cable to go to, cell phone, energy bill, renter's insurance, student loan is based on national averages. And then, of course, there's a credit card. And we are credit card agnostic. However, we know that there exists, they're common, and it's a tool that can be really dangerous if a student's not at least exposed to it in a simulation. Some students experience the credit card in the simulation and hate it and don't want one someday, and others start to get a handle on how to use it well. What we make sure that students understand is that they can expect $500 to $750 a month on their credit card. All the other scheduled payments that I just exhibited, are the kinds of payments that you make once a month or maybe bi-monthly. However, a credit card's different. It captures the day-to-day spending decisions that we all have to make, like eating, getting gas, buying clothes. We needed to find a way to capture all those, so we did it through the credit card. Students have to obviously plan for that, but one of the things that we wanted to make sure we did was use this as an opportunity to build the kinds of behavior that we know that's necessary to manage credits, to manage their credit card. So we established a penalty for students who have a balance of greater than 50% of their credit limit. Because we know that if you start to have, if you're holding high balances between billing cycles, even when you pay your bill on time and in full, when you have high balances, that it has adverse effects on your credit score. So we want to teach students that it's not like an electric bill where you just pay the bill once a month. A credit card is a bill where you have to keep an eye on your balance, and sometimes you have to pay your balance down multiple times throughout the month to make sure that you are using your credit card in a way that can hopefully build your credit score. So as I mentioned before, or at least as I showed you, there's a budget and cash flow spreadsheet. It's in Excel or Sheets that allows students to track all of this information. The students who have the most success in the simulations are the ones that really do a good job using this, and they do a good job reconciling their accounts, looking at their bank balances and comparing it to their budget. Those students are the ones that always make planned purchases and figure out exactly how much to contribute to their 401k. The students who don't use it, we see, they throttle their 401k up, and wonder why they don't have enough money. And it's, the first time you got to tell them, like, hey, I can't save 30% towards my retirement. I still got to eat, and you got to figure out what that happy medium is for you as well. So anyhow, Next thing I want to point out is after students are, reviewing the information packet and establishing what decisions they're going to make and recording those in their budget, then they're going to actually make the vendor selections just prior to the simulation launching. When a selection has been made, the tabs are green. So as an example, there's two different options here of Zippy's Auto Loan and the fine prints below, and they just have to decide, which one to go with. So the other thing to bear in mind is you have a paycheck calculator at the bottom, and this shows the students based on how much they're contributing in their 401k, what their available spending money is. So as you can see in this demo, this student decided to contribute 15% of his 401k or his pay towards his 401k, and that left a net pay of just over $1,000 to work with. And students can go back and adjust the 401k if they figure out, that they maybe are contributing too much or maybe they're not contributing enough. There is a parent link here available for students who want their parents to oversee them during the simulation. Some teachers send letters home to make them aware of this because research has indicated that when parents and teens have conversations about money, that teens learn more. The parent link does not allow a parent to engage in the simulation, just to observe their child. And then finally, the students have a help desk where they can write in when they have questions, maybe they don't understand something. This is apparent in two ways, one on the website, and then, pardon me, and then another one is available when they receive bills through emails. So the next thing I want to show you is what it looks like when a student has started playing the simulation. So in this, what I'm getting ready to exhibit is what it looks like maybe 3 or 4 weeks in. As you can see here, this student is ranked first. I don't know how many kids are in the class. This shows the engagement time, meaning how often the student checks their account every 5 days and whether or not the student's been able to avoid, some late fees. This exhibits classroom leaderboard, how their score relates to the average score, and then it also exhibits the details behind what's impacting their score. Now, before I show that, I want to point out one thing. It's not a mystery when there's something that occurs in the simulation. So 3 or 4 weeks in, quite a few things have happened, and these dashboard alerts will show students that something is going on in the simulation. So these are all examples of what's occurred, and a lot of them are credit card purchases, just so, to remind them that they have to live and there's they're eating, but it's a little bit of a nudge for them to check their balances. So whenever they receive things like an invoice for apartment or for insurance or student loan invoices, whatever that may be, that's reflected here. It's also reflected in push notifications if they decide to download our mobile app on their phone or on their tablet, and then finally, and they most importantly, they receive emails with bills. So that's how students can see those. Back to the student home, if let's say a student doesn't understand why his score or her score isn't very good, they can just view what's dinging them, and as you can see, this score has a credit card penalty, the utilization penalty that I brought up earlier. So the student needs to go at least pay down their credit card, if not pay it off completely. And so this is where students spend most of their time, and here's how they pay most of their bills. They go to vendors where there's a drop-down menu, and we're using credit cards as an example. So as you can see here, the current balance is $839, and that exceeds the $500 utilization rate. So we have $1,000 credit limit. So anything above $500 they're going to get dinged with penalties, not fees, penalties. So they need to be able to keep an eye on that and pay it down. So as we can see here, the student has not paid their credit card because the transactions are bottom up. So they had an invoice on the 10th, and it was due a while ago. So this student's pretty late, so we need to go pay the bill. So here's what it looks like. So a student recognizes they have a bill, either through a notification, an email, dashboard alert, and then they're now going to go to the bank and pay a bill. And so once they're in the bank, they select what bill they want to pay. So in this example, it's a credit card. Now you'll remember today is the 12th. They can't pay the bill today and they can't pay it tomorrow because some credit unions and banks have a 2-day processing window. We want to simulate that now so students have a grip on it, so in the real world they don't wait until the last minute to pay bills. You also notice that bills cannot be paid on Sundays or on holidays, just like in the real world. So pardon me, the data selected, you put in the amount, you put in what it's for, and you hit pay bill, and then it'll show up in pending checks after you hit the refresh button, and we know we have enough money to do that because this is the current balance that I have in my bank account. I'm going to give you just one more look at what that looks like. So let's see if the student has a cable bill. The student does have a cable bill, so let's have a look at when it's due. According to this, it's due on the 16th. Now, this doesn't say if there's a grace period day. That's in the info packet. I would know if I was responsible and already had this in my budget and cash flow spreadsheet. So the students who do well are simply just staying on top of it. They don't have to enter it in their budget and cash flow spreadsheet. They just make sure that when they do everything, when they enter a payment, that everything's in line. So again, they had a cable bill, and it was for $60, and it was due on the 16th. So I can schedule the bill to be paid on that date, and then again I just write out what it's for, how much it's for, and then what it's for, and then I pay the bill. Oops. So moving on now, the student here has an opportunity to respond to quiz questions. As of right now, there aren't any quiz questions, but when they come up, you'll see it right here. And then, as I brought up before, there is a help desk for students in case they have any questions. So a couple more things here. Bear with me while I jump back into the PowerPoint. There are 3 spring registrations that are still available. The spring registration deadline is approaching. You can register today. Classes should need to be created as quickly as possible. And I know it says simulation begins on January 14th, but you have to remember that in order for it to begin, students had to have made their vendor selection. So we recommend well before then students engaging in the simulation, and teachers well before that, spending a couple of hours diving deeply into it to make sure they have the confidence to be able to use the simulation well. So these are all the simulation dates for our sponsored simulation, H&R Block Budget Challenge, which is free for high school teachers and students, and it also is accompanied with $3 million in prizes. And this is, if you're interested, this is the time to log in, or at least write this information down. It's really easy to register. It takes about 3 minutes. It's free, and you're not on the hook for anything. If you go to hrbds.org, it guides you through registration, and if you could just put PA making sense for how you heard about us. I would recommend creating your classes now. That takes like 60 seconds, so however many classes you plan on having, go ahead and do that now. And then each class gets its own unique class code, so you'll need to pass that on to students. So once again, those simulations are 10 weeks long. So unless there are no other questions, Hillary, that is the overview of our simulation.
Great, thank you. We did have a question about whether or not the registration dates are locked. The dates shown overlap their that particular school's marking periods and semesters, and they wondered about that. And then sort of a part 2 is they have classes that meet every other day. Do you have any thoughts on how that would impact the simulation? I know we get a lot of schools alternate like an A-B day, or they meet on every odd day of a 6-day cycle, for example.
So the first one is that the sponsor simulations, these 3 in the spring that are scheduled to begin on the 14th, 28th, and then February 11th, those are not adjustable. However, custom simulations are available that are adjustable. So the sponsored are not, custom are, and those are $20 a student. We have a lot of schools who use that kind of like that A-B format. And the only thing to do is just to make, bear in mind that you probably need a little more lead time to set up the simulation. But other than that, bills don't come every single day, so there is some time. That's not an issue. And then just as somebody who used it myself, I valued it the most as a homework assignment for the last month because I wanted to see if students could, demonstrate to me that they had to be responsible and they had to live their life and go to school and then go to a job and then at home pay their bills when it might not be convenient. Because that's, we know that managing money is just as much about what you do as it is what you know.
Great, and a couple of other questions. First, is it iPad friendly?
Yes.
Okay, and how do you handle students who come into class after the simulation begins?
There's a late add option. Those students are not eligible for the scholarships, and there's like a 150-point penalty for it because they won't experience all the same bills as the other kids. They'll miss a couple, but that's common for kids to be in and out of a classroom.
Great. And any concerns if the semester begins on the day the simulation begins?
Well, if the simulation launches, let's just say the simulation launches on February 11th, and that's the first day of the semester, I wouldn't do it. I think that it would be tough on the students to make all those decisions that quickly, and I don't know if they'd have a great experience. If you can do it that same week, so let's say the 11th is probably a Thursday. If your first day of the semester is that Monday, you can do it.
Okay. And one final question, are there any modifications in the simulation for students with IEPs?
Yeah. So I'm sure, Hillary, I think we've talked about this before. I wrote a semester course with the National Disability Institute specifically for special education students. The way that I did it is I paired my students up. And I did most of the simulation in class. There's a lot of other things. I don't want to, take up too much time, but that would be custom. You would want a custom simulation for that because you can't have them working in teams if they're competing for scholarships.
Great.
But more to come there. We're looking into opportunities there.
Great. All right, thank you so much, Brian. I appreciate it. A couple of other questions here that I'll follow up with you as well offline.
Sounds great.
But appreciate your joining us, and safe travels. If I recall, you're headed to South Carolina tomorrow morning. So.
I am. Yes. Thanks for having me, Hillary. Have a great evening. Teachers,
Great.
Thank you for coming at this evening to listen.
Great. Thank you so much, Brian.
Thanks. Bye-bye.
All right, and we're going to turn from Brian Page talking about budget challenge to Dr. Brian Farester, who is joining us from PSERS, the Public School Employees Retirement System. And it's my pleasure to welcome our second Brian of the evening on with us. Brian, are you there?
I'm here.
All right, very good. I am turning things over to you here, sir. As a reminder, for our teachers, the Pennsylvania School Employees Retirement System is, I think, sometimes a misunderstood component of the employee benefit system for teachers. Perhaps maybe not as misunderstood by personal finance teachers as others, but I would hope that our participants might take in the information they have and consider ways that they can use it not only for themselves personally, but share it with their colleagues back at school, and also take back to their classrooms in terms of discussions with students about what to look for in a job and what types of retirement systems are available. So with that said, Brian, I'm seeing your slides, and I'm going to turn things over to you, sir.
Okay, great. Thank you, Hillary. And I want to thank Hillary for allowing PSERS the opportunity to participate in this evening's webinar. Let me introduce myself. My name is Dr. Brian Farester. I'm the Regional Supervisor of the Central West Office located in Evansburg. If you need to reach me, you can do so by calling toll-free 888-773-7748, extension 5875, or if you would prefer to email me, you can do so at bfarester@pa.gov. And if you just happen to call that toll-free number and enter the number one, hit number one, that will put you in touch with your local regional office based on where you're located at. But we all service the same membership, so any of us can help you. Just a general disclaimer, the pension code is complex, so it takes your participation, your questions, your interest to get the right answers. So what I'm going to do is cover, in a nutshell, your pension plan and hopefully inform you of what the pension is, what it means to you, some milestones you need to be wary of, how to increase your service, and some decisions you'll have to come to when the time comes for retirement. So, PSERS, what is it? Well, it is a governmental cost-sharing, multiple employer defined benefit pension plan, and it's administered by the Public School Employees Retirement System, which is a state agency. The employers which participate in PSERS include public school districts here in Pennsylvania, intermediate units, VOTEC and career and technology schools, participating charter schools, community colleges, state-owned universities like IUP, as well as Penn State. So those are all the public school employers. If you work for any number of those employers, you can participate in PSERS. So PSERS is a defined benefit plan. A formula is used to calculate the benefits. And when we can compare and contrast this with a 401k plan, which most Americans have in our country, a 401k plan is a defined contribution plan. So an individual who has a 401k plan, their future, their ability to do things in retirement and to maintain a certain lifestyle is totally dependent on how much money they put into the 401k plan and how well they invest it, what risks they're willing to take. You don't have to worry about that because we take care of that for you. It's a defined benefit, meaning that the formula is used to determine your lifetime benefit. So contributions and investment earnings, the fluctuations in the market, you don't have to worry about that. It will not affect your benefits. You are guaranteed a lifetime monthly benefit. And like the 401k plan, the 401k plan gets its name from the Internal Revenue Code. And we are a 401a plan. That's the code that we come under with the IRS. Now, a couple things to consider regarding your formula for this defined benefit plan is the final average salary. That's a big component to the benefit calculation. Final average salary is the average of your highest 3 school year salaries. Most likely, it's going to be your last 3, but that's not always the case. We're going to look at your whole work history and pick out your highest 3 school year salaries. And the school year, of course, is July 1 to June 30th. Membership class is the second consideration, and I'll talk about that on the next slide. And the last 2 I'm going to take together because I'm going to talk a little later about milestones. And milestones, most of them are service-based or age-based or a combination of age and service. So these are the things that you have to plan for down the road in order to obtain certain benefit levels. So let's move forward and talk about membership class. Prior to July 1st, 2011, if you qualified for membership in PSERS, you are most likely a Class TD member, and so your multiplier is 2.5%. If you qualified for enrollment in the pension system after July 1st, 2011, you're either a Class TE or a TEF member. And so whether you elected into the TF membership or you stayed with the TE depends on what your multiplier is going to be. And that plays a role in the benefit formula, which you see here. So the basic benefit formula is the final average salary multiplied by the membership class multiplier. That TD is 2.5, TE is 2%, TF is 2.5. So whatever your multiplier is, times your total years of pension credit. that will equal your annual maximum single life annuity, assuming that you withdraw no contributions and interest if you're eligible to do so. And of course, if you do not meet the milestones for a normal retirement, then there's a reduction factor that's applied to the benefit because you're taking the benefit sooner and receiving it longer. In the end, actuarially, you're getting the same amount of money, but it has to be reduced because it's being taken over a longer period of time. So milestones. These I liken to you're running that marathon, and the finish line is down the road. May seem like it's pretty far down the road for individuals that maybe are just starting their career, but nevertheless, there is a finish line. There are different types of milestones, and I'm going to talk about all of those. But first, we're going to talk about retirement types. We have a regular and a disability retirement. Regular retirement is then broken down into normal and early. So how do you obtain a normal retirement? And what is normal retirement? It means that you're receiving a full benefit. There's no reduction. So for Class TC and TD members, you only need to meet one of these three criteria. Whichever one of these three criteria is your earliest point of reaching a normal retirement, that's your goal, that's your finish line. So the first one is age 62 with at least 1 year of credited service, or the second, age 60 with 30 years of retirement credit, and finally 35 years of service regardless of age. So of those three, whichever is your first point, that's your milestone. That's the point that will get you an unreduced retirement benefit. Those of you that are Class TE or TF, you must be age 65 with 3 years of service, or any age and service combination that meets the rule of 92, which is your age and a minimum number of years of service of 35. So you have to have a minimum 35 years of service, and your age has to equal 92 for it to be a full normal retirement benefit. So what happens if you just can't make it to that finish line and life is taking you on an alternate course? So you're changing careers, you have other opportunities that you want to pursue. Well, if you're Class TC TD, as long as you have 5 or more years of credited service, you're considered vested, meaning that you're eligible for a retirement benefit. Anything less than 5 years, if you leave employment, the only thing that you can take with you is your contributions and interest. You're not eligible for a monthly benefit. But with 5 or more years, you are eligible for a monthly benefit. So between 5 years of service and whatever your first point of normal retirement is, if you can't make that normal retirement milestone, the next best thing is to try to make it to age 55 with 25 years of service. And the reason is the reduction factor is somewhere in between 4 to 7% per year that you're away from your first point of normal retirement. The age 55-25 retirement reduces the rate of the reduction to only 3% per year, and it caps it at 15%. So the most anyone that qualifies for 55-25, the most that they would be penalized or their benefit reduced would be 15%. Now, those of you that are Class TETF, you need to have 10 years of retirement credit to be vested. Anything less, we refund you your contributions and interest when you leave employment. Once you have 10 years, you're vested, eligible for a monthly benefit. TETF members also have the 55-25 reduction, but it's a maximum of 30%. So 3% per year, maximum of 30%. I mentioned vested in the term of, meaning that you're eligible for a monthly benefit. Vesting has a dual meaning. You can, at the point you leave employment, if you are not of a normal retirement age or normal retirement years of service, you can take that benefit immediately, although it will be a reduced benefit for the rest of your life, or you could defer it to a future date. You can vest it and possibly vest it to a point where you would then be eligible for a full benefit. So things happen in the workplace and outside, things that we can't predict. And that may cause us to incur a medical condition that would keep us from performing our job in the school. If you're unable to perform your current job duties, we're not looking at the whole world of work, we're looking at what you do at the district or at your school employer. If you have 5 or more years accredited service and you have a medical condition that's keeping you from performing your job, and you are within 2 school years of your last active qualifying service with PSERS, you can apply for disability benefit. And what that will enable you to do is possibly receive a higher monthly benefit than the alternative, which may be an early retirement, which has a reduction factor built into it. So that means less money for you. But the disability benefit compensates for that. It provides you with a higher monthly benefit, and it's also an increased death benefit. The drawback is you cannot withdraw your contributions and interest, but we don't require you to resign your position. So you don't have to terminate or resign your position with the district. Hopefully you have a condition that you're able to recover from and return to work. Now, we can't guarantee that there's going to be a job there for you, but you have the opportunity to recover and return to work and pick up retirement-wise where you left off. If you need more information about disability figures or the process, please speak with me or somebody else in the regional office. One other milestone is the Premium Assistance Program. This is a non-taxable benefit for an individual that meets all 3 criteria that I'm going to cover. It is a reimbursement of up to $100 per month for your out-of-pocket health care premium cost. That's your monthly health care premium. To be eligible at all for this, you need to have at least 24.5 years accredited service, or if you're a Class TC TD member, terminate employment on or after age 62 with at least 15 years of retirement credit, or for those of you that are TETF members, age 65 to 15 years, or anybody receiving a disability retirement through PSERS. So you have to meet one of those 4 conditions that I just covered. That's step 1. Step 2 is, where do you get the healthcare coverage from? It has to be through either a school employer group plan or the Pension Systems Health Options Program. And finally, there must be an out-of-pocket premium cost to you. And if there is, you met all 3 of these conditions, you qualify for that $100 reimbursement. So that's a non-taxable $100 per month added on top of your monthly benefit. So that's an extra $1,200 a year, tax-free, helping you pay for your healthcare premium. So how do you increase your benefits? As far as the final average salary, you can pick up extra duties, maybe coaching, maybe department head, running the play, whatever extra jobs you're compensated for through the district, that in one of your highest years will help as far as the portion of the formula that relates to the final average salary. The other component that you have a little bit of control over is service. Other than continuing to work year after year, you might have some work in your past that was not credited to PSERS, wasn't reported to us. So by purchasing service, that increases your service and therefore increases your future monthly benefit, as well as protecting, as an active member, a larger death benefit. Now you need to apply for this prior to terminating employment. There's 2 types of service. The first is school service, and the first one you see is what we call return and withdrawn contributions. This is somebody, if you recall, when I said you have to be vested, 5 years for TD, for TETF, it's 10 years. So somebody who left employment prior to reaching that vesting milestone. When they left, they cashed out their contributions and interest. Now they're back to work in a public school. They don't see that higher service. Well, they have to make the account whole through the purchase of what we call return of withdrawn contributions, or sometimes return a refund. The second is former part-time uncredited school service. That is where an individual is subbing, maybe with one or multiple school districts. For per diem employees, if you reach at least 80 days within a school year, that is qualifying service, and that's service that you can buy. And every little bit helps. Every little bit of service helps. The third one is approved leave of absence, and you can see the different types of approved leave of absences that you're able to purchase if they were not already reported and contributions were not already taken out for those leaves. The next category is non-school service. The first one is non-intervening military service, and this is very relevant since yesterday was Veterans Day. This is for individuals that served on active duty in the military. You can buy up to 5 years of active military service. The second non-school service is maternity leave, and the date you'll notice, November 1st, 1978, is significant because that's the date that discrimination against women who were pregnant became part of anti-discrimination laws. Prior to this point, there was this draconian rule where if you were a woman and you became pregnant, children couldn't see you, and so they would force women out of the schools. So this was a way to help redress those discriminatory practices. The third is out-of-state public school service. If you worked in a public school in another state in the United States, you can purchase up to 12 years of out-of-state service. And if you do have 12 years of out-of-state service, let's say in Ohio, you would have to work 12 years here in Pennsylvania in order to buy those 12 years from Ohio. So it's a one-to-one basis. U.S. government service. This is employment with a federal agency, such as the Peace Corps or Department of Defense Schools, where your job was educate school-age children. So you can buy up to 12 years of U.S. government service. So how do you purchase service? Well, we're a government agency. We like forms, and we have lots of forms. All of our forms are available on our website, or you can call and we can help you find the appropriate form to fill out and help you do that. Once we do receive the completed application to purchase service and we process that, you'll receive something in the mail called a statement of amount due that shows the cost and how much service will be added to your account. And that service is added immediately. Now, to purchase that service, there's a couple ways of satisfying the cost to make your account whole. One is through a lump sum payment where you just write one check and be done with it. The other is payroll deduction, where you set up payroll deduction through your district's payroll office or business office. And the last is actuarial reduction, which is the default option. No actions needed on your part. What happens is the debt rides until you retire, and what is left as the balance is factored in to the benefit calculation over the course of your lifetime. Multiple service. This is a situation where an individual, prior to becoming a public school employee, was a state employee here in the Commonwealth of Pennsylvania. The state employees have a separate pension system called the State Employees Retirement System. So if you work for PennDOT, Department of Education, Department of Health, any number of state agencies, and you belong to PSERS, you would have 365 days of qualifying with PSERS to elect multiple service, and that combines the two accounts at the time that you retire, which usually results in a higher benefit. We are in the midst of what we call statement of account season, And this is usually from September through early December. And this is the time that we mail out your annual statement as of the previous school year ending June 30th. So the statement that you have received or will receive is as of June 30th of 2015. Now the reason why these statements don't come out the very next day after the end of the school year is because many of you are receiving balance of contract payments over the summer months. So we have to wait until all that information trickles up to us. And once we have all that information, we can produce these statements. You want to check these statements out. You want to scrutinize them because you want to catch any errors or omissions now rather than later. It's easier to get the record straight now than it is 20 years from now. If you're vested, it also provides you with your death benefit as well as an estimate of what your monthly benefit would be as of the date of that school year ending. Again, please review that statement of account. Very important document. Some housekeeping information. Keep your address up to date. If you're an active member, you do that through your employer. Once you're vested or you retire, you do that directly through us, PSERS. The second item here, beneficiary information. Individuals sometimes are bombarded when they start employment with a lot of paperwork, and so the school might have a death benefit or life insurance plan, and so they have you fill out a beneficiary form. Well, whenever you qualify for enrollment in PSERS, we send you a welcome packet, and included in that packet is a nomination and beneficiary form. That form we're sending you is for your pension benefit, and individuals sometimes confuse one with the other. Please make sure you have a nomination and beneficiary form on file with us. If you do, on your statement of account on page 1, top right-hand corner, it'll give you the primary beneficiary, unless you opted us to mask that. Please make sure that the person or persons that you've listed on your beneficiary form are individuals you still want to be recipients of any death benefits. Sometimes relationships change and you might have somebody on there that you no longer care for. So at the time, at the end of your career or changing your career, if you're vested, you need to make some decisions. It's time to make decisions, and it's a tough time. Many people struggle with it. There's a handful of options to choose from, but whether it's one option or 50 options, it's still hard. So we have two categories of options. There's a single life annuity and there's a joint survivor. Under each category, there's two options to pick from. The single life annuity has the maximum option and option 1. Maximum option gives you the highest monthly check but little to no death benefit coverage. Option 1 gives you a little less per month because you're protecting a larger lump sum death benefit. Both are decreasing value death benefits. Joint survivor, on the other hand, are benefits where you are protecting not only yourself with a lifetime benefit, but one other individual that you name at retirement. So option 2 is 100% survivorship. Option 3 is 50%. You are protecting a lifetime benefit for you, and depending on option 2 or 3, whichever one you elect, upon your death, you're passing on income to one other individual. Now, if you're a Class TC or TD member, you can withdraw your contributions and interest. So think of funding your benefit as this big pie, and you're taking a slice out of that pie, and that is your contributions and interest. The remaining portions of that pie is funding a monthly benefit for the rest of your life. But the slice that you took out is your contributions and interest. You can take it directly, less the taxes, and sometimes there's some early withdrawal penalties that the IRS imposes. But if that's only if you take it directly. If you elect to do a trustee-to-trustee transfer, meaning you're withdrawing it, but you're not taking it directly, you're telling PSERS, I want you to send it to the XYZ financial institution. and put it into my IRA or my 403B. That's not a taxable event, and that will keep it tax deferred. So you now have control of that money as opposed to leaving it behind, because once you make a decision to leave that money behind, you can't change your mind later on. And of course, withdrawing your money reduces your monthly benefit because, as I said, you've taken a portion of that funding pie out. Go to our webpage. There's an excellent estimator or estimate calculator available for you. You can access it as a guest, but you need your statement of accounts. So that means a little more data manipulation on your part. If you register for the online account, that pulls in information directly from your account, so there's less data manipulation on your part. You can run as many estimates as you like and look at different scenarios for the future. Our website has all of our newsletters, publications, forms. Please check that out. Please immerse yourself in understanding what your retirement benefit is, because it is going to be a solid leg of that three-leg, and sometimes they call it a fourth-leg stool. Now, this final slide is just general contact information. Again, if you feel comfortable dealing directly with me, you're more than welcome to, or your local regional office. So that concludes my part, and I'm open for any questions or concerns.
Thank you so much, Brian. We did have a question. I know that you mentioned that there's years, when your years of service began, would help you determine how you're classed. But does that show up anywhere for someone just to verify? Is it on their, would it show up on a pay stub or on the report that they get from PSERS in the mail? Where would they go to verify which class they're in?
That's a great question, and since we're in the midst of the statement of account season, it's on the statement of account, and it's on the very first page. That will tell the individual what class of membership they're in, and if all else fails, email or call us, and we'll help.
Great, and if there's any other questions from any of our participants, feel free to offer those. I confessed, my husband showed me his statement the other week, but we were joking about his death benefit. With no plans, I promise.
That's the one joke, tongue-in-cheek, I like to say, is if you don't want someone to know what you're worth, Dad, don't show them your statement.
Yes, worth more, no. But alas. All right, well, thank you so much. I appreciate this information, and I'm sure our participants do as well. It's it's a lot to take in for a lot of folks, especially if it's their first time, really starting to pay attention to those details, which a lot of folks kind of take for granted, I think sometimes, and some folks are very familiar with the benefits offered by PSERS. So thank you very much, Brian, and we appreciate your participation as well.
Anytime. I look forward to it in the future, and have a great evening.
Great. You do the same.
Good night.
Good night. All right, and we're going to move on to the final leg of our relay here, and I'll be passing the baton to Susan Sharkey, who is the director of the High School Financial Planning Program with the organization that many of you probably know as NEFI, the National Endowment for Financial Education. And Susan, it's wonderful to have you back on our webinars. Susan has been a guest presenter in the past, and it's great to have you back on. Susan will be sharing with you some of the information from the High School Financial Planning Program that's focused on earning and careers. So, Susan, I'm going to hand things over to you.
Thank you. Can you hear me okay, Hillary?
I can, yes,
okay,
thank you.
Good. I actually hit the unmute this time, so I'm good. Welcome, everybody. I am a former educator who is here to help you find some resources that you might be able to use. I work for an organization that has provided free financial education resources for 30 years. We also facilitate research to help this arena. And tonight I want to show you some of our materials by way of walking you through 14 tips that you would want to share with youth about income and employment. But I will also show you, give you just a quick overview of our resources and how you can access them immediately. We'll do that at the end. I also have a resource to show people that was just launched a month ago, and it's a way for you to access resources, again, at no cost. And then Hillary, I'm throwing in a bonus at the end for our, particularly for our elementary and middle school teachers. So something that I don't even think you have seen, so stay tuned.
Oh, I'm excited.
Yeah.
Bated breath. I have to wait till the end.
There you go. So rather than I just show you our materials where they're at, I have pulled out some slides that relate to 5 of our lessons, and we're focused on income and careers and employment tonight. So I thought I'd pull those out and share with you 14 big ideas that you might be able to work into any of your lessons. And this can be applicable when you're working with your elementary students on job skills, your middle grade students on developing employability skills, and also thinking about summer and part-time employment, and especially for your 8th and 9th graders as they plan their program of work or study for their high school career. So these slides, some have quite a bit of information, but they are all available to you online, so you don't have to feverishly take notes. I just hope that you can walk away with something for your own personal life, as well as something to share with your young people in your family and also at school. So we're looking at big ideas, and the whole umbrella theme here is helping our young people dig that well before they're thirsty. Have something in their back pocket so they can make adjustments as their life circumstances change, as the economy changes, and also as their family situation, financial situation changes. We're trying to help them be self-contained and financially independent, and there are so many ways that you can introduce that and model that as young people. It all boils down to criterion-based decision making, and you could see the questions there, but helping the young people think for themselves what kind of lifestyle they want and what might be some very realistic and relevant solutions for them to earn income and also have a career that they find fulfilling. Because I know you all are in careers right now that are fulfilling, so we want to help our young people get there as well. So obviously the first off the bat is just plan ahead. Everything they do right now, even as a young person, is helping them down that path. They're exploring tasks they like and don't like. They're taking part-time employment where they also might be developing skills, exploring aspects of jobs they like, but they're also networking. And this comes in handy too when it comes time for scholarships. If they are known in the community and they are known by local employers, it also gives them a little extra leg up as people are making decisions about scholarships. But they're being proactive, and by positioning themselves in a manner where opportunities are available, hopefully they will be better able to manage the dips in their employment career. We're just trying to help young people not close any doors. The second part is to really emphasize to our young people and their parents the value of education. It is an investment in ourselves, and it's something that we are now expected to do our entire life. I know our educators have professional development requirements to retain license, and that is true in many other careers. And because people change careers and jobs, 8 to 10 times in their working career, people have to be able to move with the times, change with the technology, the way we do business, and also change when some jobs become obsolete and new jobs occur. So we're looking at helping our young people look ahead and ensure that they also have income to keep ahead of inflation. You want to make sure that they also are retaining skill sets so they can increase their income value. If they're not increasing their salaries up approximately 3% every year, they won't be keeping up with the average inflation. We want people to be very intentional when they think about education. My own children are in their 20s. They both graduated from college on time, but we were very purposeful in where they went to college, so they would not have to make time for catch-up classes because they both changed career decisions. So one thing is to think about your criteria. What are all those possible careers I might consider? Are they all at that same institution in case I change my mind? What is the reputation of the institution in helping me find jobs later? I cannot stress enough the value in sharing with our young people that there are 4 different ways to obtain higher education, whether it's a 4-year college, a 2-year program, or apprenticeship or on-the-job programs, and also the military. And it's something especially to share with our parents, because right now I think we all hear the emphasis on 4-year colleges, and some people might shut down, and there's so many other ways to go about that. Particularly in our trades, there are some high-paying jobs, and there are needs in several of those areas. There are shortages in those areas. But help our young people pick options that might match what they want to do and also match their capability. That's something we can help guide them with, and we partner with our parents to do that. There are ways to manage education costs. It is expensive, but there are ways to streamline expenses on one end and also to comparison shop. We don't have to necessarily go to the most expensive school. Or might we start with a 2-year program locally and then transition to a 4-year college if that is our route? Might we work through the ROTC program to help pay for funding? Our last option should be taking student loans. Are there other ways to go about doing this? Senior year is too late to start thinking about saving. That's why we'd want to start earlier. Might someone also find an avenue through an employer as they start working at a, I know when I had young people working at McDonald's, they actually had the option to go to Hamburger University for leadership skills. It was paid for. It got their leg in the door to transition into some other programs as well. And the employer was willing to pay for that. That's just one example. But in essence, this 4th bullet is know before you go. Know what it's going to cost. Know if you can afford it. Know how you're going to pay for it. Plan to finish on time as well. It's really important to stress to your 8th, 9th, 10th graders the value of passing all their classes, carrying a full load in high school so they can finish with the appropriate credits for whatever the next step is, whether it's apprenticeship, 2-year college, 4-year college. We don't want them to waste any class time that they're paying for because they have to take remediation classes. So we need to really stress to our young people the value of sticking to it and making sure they finish their required courses. Same as looking at criteria for schools. Help your young people think about what is important to them for employment. We all want to obviously work for money and the other benefits, but we should also work for satisfaction. And this is a time to help the young people get in the practice of thinking about what is important to them. What type of work do they like? This is an opportunity to explore. What's their bottom line criteria for pay or maybe hours? But having them starting to think about those payoffs and trade-offs. Again, these are the financial decisions, weighing the pros and the cons, thinking how this is going to impact your lifestyle and your funding sources. Help them be very realistic about their skill set and where they might find success. Many students think that a part-time job is the only way they can obtain job skills, but they can also do this through training camps, volunteer work, starting their own business, lawn care, child care, pet service. There are many ways for young people to obtain work and personal skills through those entrepreneurial opportunities. They might even interview and job shadow to see if they like a job or spark an interest. And I know here at NAFE we hire interns and quite a few of them have actually been hired full-time. So it got their foot in the door. We spent a lot of time, I know when I was working in the school of work arena, we spent a lot of time helping the young people develop interview skills, write that resume, which is still important, but that's only one part of that employment process. Once they're close to obtaining the job, another skill to introduce to them is sitting down, taking time to compare job offers or job opportunities. It's more than the pay, obviously. Are the work conditions appropriate or something that I will enjoy, or I won't want to go to work, obviously. What about the management style? I would tell my students that as they're being interviewed for their skills, they should also be interviewing to see if the workplace is conducive to their style, or they're going to struggle getting along with the other people. Are there opportunities for them to grow, develop into a higher pay scale, to move up the ladder with some job skill growth? What about pay? Will the employer also help pay for further education? Compensation packages are something they should be looking at. Not only insurance, but many employers will offer retirement match funds, and young people need to look at that. Are they paying for parking? Do they get reimbursed for their uniforms, etc.? And then they should also think about some of those income reducers, which might be those hidden costs in the trades industry. Many of those workers have to buy their own tools. Does someone have to pay for their own uniform? Are there other hidden costs such as paying for transportation? Is that eating into their income or their pay? Is the location appropriate? Do they feel safe going to and from? Can they get there on time? If their car breaks down, is there other transportation? If they're thinking of moving to another location, moving out of the house on their own, can they afford it? Are they earning enough money to cover their cost of living? I know we just went through some retirement information. Some of that is relevant to your young people too, but you really want them to be aware of what's in their paycheck and what their benefits are. We get a lot of questions from the teachers and the youth in this section. They don't know what all the acronyms mean on their pay stub. When they actually sign up for a job, they're not clear on what some of these benefits are, so they're not even positive what they're signing up for. So walk them through that. Walk them through the exercise of filling out that W-4. Explain why someone might mark exempt or claim 1, 2 allowances on that withholding. Explain how that impacts their taxes. Consider or have the students consider the value of auto deposit on the paycheck. It's a good time to encourage them to open a checking or savings account if they haven't done so. And part of this is convenience, but it's also a security factor that would help them with prevent losing it or making sure that they get their own money to their own account. I didn't mention it here, but some employers also pay their employees by a prepaid credit card. And if that's so, you need to make sure that young people know what charges they might incur as they're making withdrawals from that card, and how do they manage that. I know most of your young people are covered under insurance with their parents, but it's a good idea just to make especially your juniors and seniors aware of the difference in the plans and the value of working through an employer group plan if possible. Do they have options for the health savings accounts and retirement savings accounts? In one of our lessons, we just spend time just talking about the value of employer matches for retirement funds. And the earlier they can get started, the higher the payoff. My students used to really appreciate that they would have more money than I would, because I didn't have the option to do that until later in my career, but they could start earlier. Talk to them about the auto payroll deductions and how that impacts their net pay, and what advantages they might have as well. It's really important for them to be considering their income tax liability. Fifth graders, do they need to work on income taxes? Probably not, but juniors and seniors will be taking on that responsibility fairly soon. My guess is most of the young people now have their parents do their taxes. I did look this up, and in Pennsylvania, your youth need to have a youth work permit. And there are some very prescriptive rules about young people and employment. So take some time to look that up. Make sure your students are aware of those rules. Not all of your employers will make the young people aware. I'm not saying they're purposefully taking advantage of the young folks, but if it's not brought to their attention, they may let some things slide. So work permits are required, and that means they also have restrictions on their types of work they do and the hours that they work during the school year. But also when someone starts a job, walk the young people through the simulation of checking through an employee manual. What will they find there? What do they do if they have an injury on the job? Because there are some timelines associated with that paperwork. Talk to them about harassment. I had quite a few instances of students who, not necessarily sexual harassment, but they were harassed at work because they were expected to do some job tasks that were not appropriate for underage youth. Some employers are taking advantage of them by not paying them on time. But do some role play. How do the young people stand up to that, and what's the best resolution for some of these issues? And it's really important to help your young people understand the value of chain of command and who they report to and how they handle work assignments at work. We're getting towards the, as they're working, obviously the conditions will never remain the same. So these last few slides have to do with changes in employment. You and your young people need to pay attention to trends and outlook. They need to think ahead. What will be the jobs available as they get out into the workplace? What's happening economically? Are there some, and we used to talk about this as a way of investing. You're kind of anticipating what's going to happen down the road. But for example, we know that the aging population will be growing. The seniors, there will be a higher number of seniors. So what will be some careers that and jobs that will be needed to support that growing population? Healthcare would be one. So have the students think of and anticipate what would be some jobs 5, 10 years from now that they could be primed and ready to jump into when there's a high need. As the young people are thinking of moving, and I expect they will, whether it's moving out of their house within the same community or maybe to a different town, a different state, there are some wonderful websites that helps people look at the cost of living differences and how they might deal with that. So have them take a look at that. And as always, planning for change. What will they do? This is all about budgeting. Do they have a backup plan? Do they have the skills? Do they have an emergency fund? Young people do not have a steady source of income, so it's a good time to use that analogy to explain how they handle those down times. What is their plan when they don't have a steady income, but they still have expenses? Where can they get other sources of income? What's the value of having that rainy day fund? And if someone loses their job, again, role play is important here. You don't just storm out. You want to make sure you've taken care of business. Did you listen to why you were terminated or laid off? Do you know what to do and where to get your final paycheck? Is there any assistance that you can get when you're making the change? Find out how to get that final paycheck, or if you're eligible for unemployment, what are the steps? Even if someone is let go of a job, there's always value in leaving on a high note in case circumstances change. So all these are, the slides I just showed you have all been culled from these 5 lessons. We have 45-minute lessons. This just happens to be the list of the 5 lessons for our Earning Power module. You are welcome to use these. They're most appropriate for grades 8 to 12. We have everything available online. You just need to go to our HSFPP for High School Financial Planning Program.org, and you can immediately download all the lessons, the PowerPoints, the performance assessments with scoring guides. It's all there for you to use. If you need it tomorrow, go ahead, pull these down tonight, you'll be good to go. You can order student workbooks, and we will ship those to you free. All this is free for you to use, as well as participant certificates. So 3 other resources, and we just launched this week our updated 40 money management tips for college students. You'll have this link so you can download the same piece. We are also building an app so we can have all that electronic. At moneyteach.org, you'll be able to search and find lessons from multiple providers. So right now you can find all of our resources here, as well as University of Arizona's Take Charge Today resources. You can select the content area, the grade level, the type of material, and we popped up a list of resources to save you time looking through a whole bunch of other pieces. It's kind of like the Best Buy of financial education, where you can walk in Best Buy and you can touch and feel all different types of computers. The same thing is true at the moneyteach.org site. The last site I want to show you, if you Google math that makes sense, you'll find some math activities for grades 3 to 8. They all have a personal finance theme, but you can just drop these lessons into any existing coursework that you're doing, and they'll show links to specific math standards as well. So this is something new. It just became available within the last few weeks out of the University of Cincinnati, and that's free for you to use. I thought that would be of interest to our elementary and middle school teachers. So I'm sorry, I'm a little over time, so I'm going to turn this back over to Hillary. You do have all of these resources in the presentation.
Thank you so much, Susan. I love it. Math that makes sense. Lots of us that try and play play on those words there. It's always fun. So thank you again for sharing that great information, and for also previewing some of the new, previewing and showing us some of the new, newest and greatest stuff that NEFI is doing and that's available. So again, I appreciate that. I'm just going to wrap things up here at the very end with a couple of just tidbits of information for our participants, and then share information on completing the evaluation. As soon as the new year rolls around, it's my understanding that the Pathway to Financial Success grants will be coming available. Any high school teachers in particular that are looking for funding to support their efforts, if you're a middle or elementary school teacher, I would encourage you thinking of ways to partner with high school teachers that might be able to put together a joint initiative. Also, just mention the brand new resource that came out. The Consumer Finance Protection Bureau released a new youth financial education curriculum review tool, which I think might be of interest to anybody who's looking at curriculum and trying to decide what might be the best fit for them. This is a great new tool that we'll probably spend some time on a future webinar going into more detail on. And just a reminder that we do have 4 more webinars set up for this school year after the new year. So please join us in those wintry months of January, February, hopefully not so wintry in March and April, but you never know. So mark your calendars and feel free to register for those at any time. If you have any questions, feel free to contact me at any time. I look forward to being able to assist you in your financial education efforts. And thanks again to our fantastic presenters and to each of our participants this evening.